Basically, in it, I put out my trade signals. So most of them are US based stocks, but they're all big caps like Apple, Microsoft. They're ETFs that track the S&P or oil or so there's a lot of probably overlap. Yeah, so I think that my guess is that you're not going to see price, right? So prices tend to be sticky, and this is the same for wages, for prices. I mean, gasoline comes down, we know that with oil, but notice how again, when oil goes up $10, prices go up really quickly at the pump. When it drops 10, it goes down really slowly, right?
Yeah, funny about that.
My fear is that a lot of the prices that people are seeing in the stores will stay. Now, maybe they don't go up much, maybe only just a few percentage, 4 or 5% a year, but that's going to put a lot of people in a hard position where unless they're making more money, they're going to be struggling. So I do worry that there's certain areas of the population that are going to feel like it's a depression. But I also think that it probably won't be a true depression for at least 5 years or so. So I think the Fed is going to play this kind of back and forth game where as we slip into recession, they're going to start to cut rates again and start to print money again. Then inflation is going to surge again. Then they're going to have to raise rates again. And then that's going to slow the economy. And it's going to be this back and forth kind of this, which one's the worst scenario for us? Let's attack that one. And then eventually later this decade, I do think we have a depression. Yes, I mean, basically I'm looking at the 100-year cycle, noticing how again, we had COVID with the Spanish flu about the 100-year cycle, and it does tell us that something's coming. And you can almost see the writing on the wall, right? I mean, all of these things that have been done, this financial maneuvering by all central banks, I mean, all of us know it's not going to end well. It's just when is that timing where everything just kind of falls apart? Yeah, so I think the best thing to do is just to be cautious. For me, it's a swing traders market, which you're right, not everyone can do that. Not everyone feels comfortable doing that. But I do think there are opportunities. Like I know we're going to talk about gold. Maybe we can use this to branch into gold. But I continue to be a huge fan of gold. And then when Bitcoin gets into the kind of the teens, the low teens, maybe even the single digits, I do think that is a buying opportunity where as the market starts to realize that the Fed is always going to come back with their same game plan every time we slip into recession and print more money, I do think Bitcoin has that place and could be the massive up mover like I showed on that Amazon chart. But again, gold is such a great play right now. Most people aren't really fully, like you look at the gold chart, and I hope you don't mind that I'm kind of taking us in this direction.
Go for it.
But if you look at the gold chart, a lot of people are like, oh, gold stinks. It hasn't even moved all year. You know, we're basically hovering at the same level we were at the start of the year, which was right over here, right? So, I mean, maybe we're up 1% or 2% on gold, but this is only one small portion of the deal here. Number one, Bitcoin's down over 50% since the start of the year, maybe even more. Number two, the equity markets, you know, the S&P's down over 20%, NASDAQ is down over 30%. So now you're in an asset where it's been holding steady. And not only that, but usually in a market where the dollar soars, gold gets smoked, but gold has been rocking here. Take a look at the DXY, the move from the beginning of the year. Here's the beginning of the year, and look at the dollar. The fact that gold is still even flat to positive when the dollar has soared is hugely bullish, right? And then the other side of the coin, and you know this too, Carrie, is that when yields start to go up, usually usually gold also gets pounded. And look at yields since the start of the year. We're basically up over 100% on yields, and gold has still held strong. So again, it's not flashy, it's not sexy, but gold has been rocking it this year. And what it tells me is that when the dollar finally starts to decline or when yields continue to pull back, you could see a major move up in gold. The chart right here in these parallel lines, at least for me until proven otherwise, is everything, right? So we can clearly see that this is going back to 2015. Then you had this high in 2016. You missed it a little bit here in 2020, and now you're hitting this line. And notice the parallel line is almost perfectly touching here and then touches here and here. So what I like to do is when I look at charts, I say, okay, anything can happen. You're going to hear people saying, oh, the dollar is going to go to zero. You're going to hear people saying, oh, the dollar is going to continue to rip higher. It's the only game in town. I'm more in the middle ground where I say, well, let the chart tell me. Let the chart tell me. And what I see right here is that every time we come up here in the past, we're kind of getting a pullback, you know, here, 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 and here, and that tells me that the probabilities of a move is for a down move. So I'm actually bearish on the dollar here in the near term. Over the next couple months, I think the dollar could pull back. Yeah, and I would just point this out is if, let's say the dollar wasn't up huge this year, I think gold could be $100, $200 higher, right? I think if yields weren't soaring this year, same thing. So you have to put it in those perspectives. And then the basics of it is that, you know, gold has held your value this year if you were in it versus the S&P or Bitcoin. And I still will tell you, I mean, here's your trend line. You broke out right here. You went to double top. That's a classic double top with this high in 2020. We then had a pullback to the scene of the crime. We kind of kissed it again. But gold is still holding this golden trend line, if you will, that tells me it's still in a breakout, even though it hasn't soared yet. I would just say look for the signals. Look for the dollar to start to come in. Things like that could be the catalyst to the bigger move up in gold that should start sooner than later. Yeah, I mean, I think any sort of, you know, geopolitical, I mean, if the war, hopefully not, but if it were to spread, people would absolutely run into that. They'd also run into the dollar though, frankly. So again, then you'd have that battle of dollar up and then gold. Can gold also move up? So it's tricky, right? I mean, you know, you have to look at it in those terms, but I think instability and fear are reasons why people buy gold. And I think that fear factor of what's the Federal Reserve going to do? Is the economy going to go into recession? Are they going to start printing again? Or is it reset? You know, this is why gold to me makes so much sense, is because if the Fed is printing, then you have inflation. If they're tightening, then you have recession, and the fear of a recession makes people buy gold. So it's kind of like both sides to me make sense with gold. So again, it should be one of those things where it's almost like you sleep a lot better at night having some gold in your portfolio. Yeah, so I mean, the longer term chart, I still am bullish on for sure. You have the big move up here. This is all sideways consolidation on a bigger time frame. But there's no denying that right now we've had a little bit of a short-term breakdown on silver, and your next target is around $19. So my guess is we do test 19, and a lot of people are saying, you know, why is gold holding up but silver's kind of coming down? And the essence of that is basically the industrial side, right? So silver has that side of it where it's used in batteries, it's used in solar panels. So if the economy is moving towards recession, then it makes sense that there could be a weakening in silver, even if some people are buying it as a store of safety. Now, longer term, you know, and this is the big thing too, right? Is a longer term, is it dead? No. And the bottom line is we're moving towards an economy where there's more alternate energy like solar, more electric cars. So I mean, shorter term, yes, recessions come and go, but I think again, the switchover has started, and the 19 level is a huge buying opportunity. I'll be eyeing that one to buy some. This is LAC, which is a Lithium Americas Corp. But I mean, the bottom line is that in recessions, you're going to see these things pull back. Like we've seen copper have a big pullback, all of these kind of industrial silver. We just talked about silver. So you have to understand that. And the biggest signals, by the way, was the hype, right? I mean, there was so much hype around lithium, and because of the Elon Musk story and Tesla and electric cars. But you always want to remember to sell into that hype. When it gets to that level where you walk into your local pizza place or you know, sandwich shop and they're talking about it, always remember that's your signal. You should get nervous if you're long these type of things. And then the bottom line is let it come down. It may still have a big macro move to the upside down the line, but they just have to correct. It has to flush out what we call the weak hands. So like on LAC here, I would start getting really interested right around this $16, $17 level here. You know, lots of support in here. You get back to this 2021 area. And in fact, there's also a trend line I'm seeing right here where this is actually why we're holding this level. Now, I don't think this level holds for too much longer, but look at that beautiful trend line right there with price just above it. So you're still actually holding support here, but I would say that, you know, with the economy maybe inching towards recession, it wouldn't shock me to see a little bit more downside.